JB here, October 6th, 2023. Hope everyone's doing outstanding. Not going to talk about too much that I already haven't talked about this week, but we had the all important jobs report. Hold on one second. Whoops. The September jobs report came out this morning. The big binary event of the week. Next week we have earnings, but a weaker than expected number. The markets probably would have rallied. A big beat on above estimates, and you would think the market would sell off. But sure enough, big beat. Markets gapped lower after the report and have since bounced back. We're almost nearly flat on the S&P. Nasdaq and small caps are in the green. Yeah, interesting stuff. So is this the bottom? I was hoping for some type of capitulation. I'm not saying this morning wasn't that moment, but you would think we would have a little more, I wouldn't call it panic, but I want to see a little more where the bulls throw in the towel, where the buyers say, okay, that's it. We're going much lower, and then we have a reversal. I don't know if that was it. I mean, certainly down to 421, under 421 on SPY. I think it was 420.38. Let's see what the lows were this morning. Well, actually, I mean, we broke under 420 in the pre-market, but the low this week was 420.28. That was kind of the support areas I was looking at. So we'll have to see how this all plays out. We have a long weekend. It's a holiday weekend. A lot of banks and schools and things are closed on Monday, so you have a lot of headlines and things to folks to muster over the weekend. So it'll certainly be interesting. But you take a look at the report. Huge beat on the report, and then upside revisions to the previous 2 months. Huge revisions. The unemployment rate stayed pat, and you have two different spins on it. And one is, the Fed is trying to induce unemployment, right? You want the unemployment level to go up, spending power come down, inflation, that will help with inflation, and hopefully not too much that it causes a recession, but enough to pull back pricing. All right, once pricing comes down, unemployment stays steady. That's their two mandates, or supposedly the Fed's two mandates, is to keep inflation at 2% and to have full employment, which obviously with the unemployment rate at historical lows, we definitely have full employment. So we'll have to see how this all plays out. I thought 415, 416 on the SPY, and here we are. It's almost back right at the 425 handle. We start going here. We have a slingshot move. Maybe we get to 428. I don't know. So many things are oversold. We've had, take a look at some of these names, and I use McDonald's as an example only because that article from the Wall Street Journal yesterday on GLP-1 drugs, but that one, 200, I think it was 280 last week. No, not last week. To start September, 280, 250 in the middle of September, and it has done nothing but sell off. And the days it's green are small up days, barely, and the days it sells off, down 2%. And this is a Dow stock, so it's not one that typically has these type of outsized moves, but I think a lot of it is a function of the whole landscape changing in regards to folks taking these GLP-1 drugs. But but there's a lot of these names that are oversold, right? So I talk about this a lot the last couple of days, but there's always money coming into the market, right? Passive investments, the pensions, the 401ks, the funds, ETFs, all that money has to go. It goes to buy stuff, right? So then we need sellers. So who's selling? Is the selling done? So interesting stuff. The other thing on the jobs report too, you look, and a lot of folks are saying that, or you read out there, the reason it was such a big beat was because the part-time employment. So you're getting kind of a double count, right? So if you have someone who has to support the family, and they have to get 2 or 3 part-time jobs instead of one full-time job, now you're overcounting employment numbers. And then also the wages decreased, which would kind of go in the Fed's favor in regards to not raising rates at the next meeting or the following meeting, because if wages go down, less spending power equals less demand equals lower inflation. But it's a whole cycle. So if you look at that as well, you would say, well, full-time jobs typically pay higher than the part-time jobs. So because of the folks taking multiple part-time jobs, which inflates the employment number, it's also putting pressure on the wage numbers, right? Because lower part-time jobs are usually the lower paid tier, and if that's the case, then it's going to weigh on those wage numbers, so the salary numbers. So you could take it with two sides, and maybe folks are looking at the data and saying, well, maybe this is just a function of more people doing part-time jobs. I don't know. I was hoping to see a capitulation move. Maybe we get that next week, but more to talk about, I guess, on Monday as we see this kind of work out. 425 was resistance on the way down. We break through 425 here on the SPY. Maybe we get to 427 or so today on a kind of like a slingshot move. Sellers say, okay, I'm going to wait. They throw in the cards a little bit, just like on the flip side, and we head higher. A couple names, and I got lucky with Domino's Pizza, and I could talk about Domino's for again, like I did the last couple rants, but I won't talk too much about it. Sold off all the way down to 345. Locked some of my weekly puts, which were not looking good coming into today, for over for 10 bags. Still have a couple left. It's right up here at 350. I'll just hold on to those. I think there's a possibility we have another pull, and you take a look at what happened with McDonald's. I think I don't want to be in a situation where we get a reversal and it breaks back under 345, so I'll hold the rest of those. Still have some October 20s. I was looking to lock some of those in. I probably will lock some of those in before the close and then ride those into earnings now that I'm kind of riding free on Domino's. They got downgraded this morning. It wasn't a downgrade, but Barclays took their price target. They actually raised the price target to 335 from 320 and maintained an underweight rating. I hate when analysts do this inside right before an earnings. Here you are, you're getting material data on next Thursday morning, and you're an analyst and you're going to come out with a change of your rating on the stock. That just doesn't make sense to me. Why not wait 6 more days and wait till after earnings, or 7 more days, Friday, a week from today, and come out and change your rating on the stock after you get this data, right? Why would you do that before? I don't get it, but hey, they have an underweight rating. I'm not sure if that helped with the selling pressure at the open, but still, you take a look at what happened with McDonald's, some of these casual dining stocks. I think it's still a residual effect of what that article yesterday from the Wall Street Journal is kind of weighing on some of these names. So that's that. At some point, I'll lock some of those in later today, and then I'll just hold the rest. So that's Domino's Pizza. Lululemon got lucky. It was down to 358 at the open, all the way down to 354. Again, similar to what happened at my Domino's puts, those came back to life. Lulu, it seems every day it sells off, breaks under the 50-day moving average, which it did the last couple weeks, and then the last couple days. Once it has pressure in the morning, it seems like buyers come in right at the bottom, and then it just melts higher for the rest of the day. Did not want to see a session that's I didn't want to see the profits go away as it duplicates what it's done in the past, so I locked the puts in. Not sure I'm going to revisit Lulu for now. I mentioned it yesterday in the rant. It's a cult name. It has that, the aura like Apple, Tesla, and I think a lot of folks just bid it up anytime they see weakness. So I'll probably just put that on the sidelines. But then the flip side is ULTA, and I still have a couple 385s which I probably should have closed earlier. I'll hold on to those. They expired today, but they're freebies. Had some profits on that, and then I added some more strikes. I think it heads under 370 next week, even if the market rallies. It seems like the whole retail sector needs to be repriced. And, take a look at ULTA. I think maybe it trades to 350 or below, even if the market finds footing in the next couple of days and next week. So let's see does ULTA have their earnings date yet? I didn't even look at that. I might try they won't report till the end of November. So there's plenty of time. Premiums remain low because it doesn't have the option. It's not earnings week. So I may look to get some more strikes, especially if it doesn't reverse here over 390. Still think that trade's lower. What else I have? Weight Watchers had an announcement this morning, or a press release talking about their enhanced enterprise offerings. They also announced a chief medical officer. I have to do more due diligence on this person. I don't know who she is, but they're talking about they're going to have a platform that includes their science-proven behavior change program with sustained outcomes, robust virtual and in real-life community, coach support at scale, integrated health insights, and virtual clinical care and medication management, including GLP-1 when appropriate. Again, I talked about Weight Watchers yesterday. It's selling off for no reason. I think people still associate Weight Watchers with just being a diet program within face-to-face meetings once a week to hold people accountable. How many points you use, things like that. I think that's a lot of folks out there still think that's what they are. They're going to be so much more than that, especially in the coming months. And the fact that they're going to be able to tap into that, the GLP-1 side. I put on the watch list this morning that Wall Street Journal article, which I keep talking about. They mentioned that 25 million folks are estimated to be on GLP-1 drugs by 2035. I think that's probably undershooting what that might be, and that would be a potential 7% of the U.S. population. That's just a huge market. And you start thinking about how much those drugs cost and start doing the math. I mean, you're talking hundreds and hundreds of billions of dollars. And Weight Watchers, which is what are they right now? $900 million $900 million company. Let's see. They don't even need to get a lot of that to be an attractive name. They're a $788 million company. And a lot of that is their debt. And, I've talked about Domino's Pizza and its debt. Weight Watchers, to me, the difference between Weight Watchers and their debt and Domino's Pizza and their debt is Weight Watchers in the midst of a turnaround. Their debt's not due until 2031. I have to go look up the date. And I think at the point it gets to 2030 or so, they're going to be flush with cash, probably have paid off the debt, and that's going to be a non-issue. But right now people focus on the debt because they think if Weight Watchers continues down their path, they're going to go to zero, which would make sense when you have more debt than your market valuation. But that's kind of that. That's Weight Watchers. VKTX all the way up to 1216 this morning. There was some odd option activity, which that's been pretty much par for the course on VKTX. It seems every month there's some kind of crazy call volume, and some of it has to be shorts that are selling to open, taking advantage of weakness, or taking advantage of shorts going in there and punishing the stock. They're going to have to come out with their data. So their oral phase 2 data for their GLP-1 drug is going to come out sometime in the next couple of weeks. If that comes out, any hint of positive data comes out from that, the stock's going to be over $20, if not higher. Maybe the bears think that it's not going to be a positive data, so that's why they're shorting it. I don't know, but I'll continue to hold my strikes there. Kicking my butt for missing McDonald's. I was talking about it yesterday, posted a chart a couple times, all the way down to 2:45 in the morning. I'm not going to chase it. I'm not going to try and time that one. Other names, I put it on the watch list this morning for the first time in I don't even know how long. Twilio, that one's been beaten up. It's one of those names Kathy Wood has liked over the last couple of years. And finally a decent day here, up nearly 2%, all the way down from 67.50 at the start of September. So if the market does find some footing, maybe a name to play for upside. I always talk about Roku. Roku, actually, it looked like it was going to have two back-to-back solid high-a-day closes before late-day fade yesterday, and then today it reversed course down to 68 after the open, back up here in 70.51 right now. Another name, it's Friday, it's 11:20. I'm probably not going to chase after too many lottos here into the afternoon just because, but could be a nice lotto. Oh, Domino's over 350. Come on, Domino's. Yeah, I'm trying to think. Oh, gold. I put on a watch list this morning. I was going to try and cut the last of my November puts on GLD, 1845. Sure enough, gold gets up to 1845. It's right here at 1843. I still think that gets to 1820. Down 9 sessions in a row. It's almost like people are starting to catch up to the fact that higher rates for longer is not good for gold. The stronger U.S. dollar is not good for gold. It doesn't offer any kind of, there's no yield on it, and it's up so much. So just those factors alone, I think, will continue to add pressure, and gold is, it's in the eye of the beauty holder, right, or the eye of the beholder, however you want to call it. So there's no underlying fundamentals for gold. It's just, it's a finite resource that's been historically a store of value, and people use it for other things as well. But just thinking the current situation that's going on with the markets and what's going on with cryptocurrency. I'm not going to go on a rant on gold right now, but I think it heads to that 1820 handle. If it breaks under that, I'll look for more positions to play that for downside. I think that's it. banks next week. So, I was looking at BlackRock. You have, I think it's Citi, JPM. Let's see who's on Friday. Calendar. Let's see if I can pull this up. So that's next Friday. JP Morgan, BlackRock, Citigroup, Wells Fargo all report, and United Health all report Friday before the open. I know sometimes I look for BlackRock for earnings. I'll probably wait till after the open on Friday. But some of these bank names like Goldman Sachs, which will report the following week, and Morgan Stanley. Goldman Sachs was 345 middle of September. It hit 305 on Wednesday. So, I'm not saying it can't bounce, but maybe it's a sign of there's going to be more weakness in that sector through earnings. So, and similar to BlackRock, and I hate to sit here and paint a bearish picture or put my bear suit on, but that 710 middle of September down to 620. So pretty much $100 drop in BlackRock over a 3-week time frame. Bounced here at 620. Maybe that's another one that maybe gets to 550 or so. So just some things I'm looking at over this week, and I'm not sure if I'm going to trade any more earnings into next week. I'll just hold my Domino's Pizza puts. But yeah, that's it. So that's all my rant. Let's have a great day, folks. I'll try and get on later. If not, have a great weekend. Rock and roll.